Welcome to Central Bank Central. I'm Kathleen Hays. Today, we are going to look into one of the biggest stories that's broken in this central bank independence debate, battle, some might say, especially if you're at the Federal Reserve, and especially if you're Jerome Powell, the chair of the Fed. I'm happy to welcome back to Central Bank Central Alan Blinder, former vice chair of the Federal Reserve and the Gordon Rentschler Professor for Economics and Public Affairs at Princeton University. Alan, it's great to see you again. Can't say it's the story that's most fun for everybody to talk about,
Yeah,
especially if you're a former Fed vice chair. Come on, but let's start there. How surprised were you about this?
I was surprised. Not that Trump is picking on the Fed. He's been picking on the Fed almost from the day he appointed Jay Powell. Uh, but he had been quiet, and a lot of other things have been going on. And he only has to wait until May when the law, without violating the law, which he seems to like to do, but the law enables him to put a new person in that job, as the President of the United States has that right. As long as the Senate will confirm that person. So it's not that far off. We're already deep into January. And even though we know he's not a patient or prudent person, I thought he might, A, have enough patience to wait till May, and B, be somewhat engaged with other things like invading foreign countries and just to, and shooting Americans on the street, you know. There are a few big things going on outside the realm of monetary policy.
What do you think has spurred this? I mean, you can just briefly say that the Powell oversaw, and a couple of members from the Board of Governors probably, this big renovation of the Eckles building. Okay, and then there was a testimony where he was answering questions from Tim Scott, well-known senator, uh, Republican senator. And anyway, it blew up into something that, yes, maybe the Fed overdid it with the renovation. Maybe they shouldn't have done this. But I don't think it's so much the details of that now because that's been out there for so long. And the president seemed
Yeah,
to have kind of gotten past that. But
yeah.
when you look at how the Fed works, is there anything you want to say about that particular aspect of this? Because that's where it all, well, it didn't, not all where it started. It was the biggest excuse that Trump has come up with yet in his mind to get rid of Jay Powell.
Yeah, no, that's what he's trying to do. He's trying to force Powell out. The only thing I have to say to that is the obvious point or the obvious question. Have you ever heard of a building that had a cost overrun while being built or renovated? Unheard of. Nobody ever. I mean, right. Isn't that evidence itself of malfeasance? The first overrun, cost overrun in the history of construction?
Well, of course, we know it wasn't the first Culver run. There's questions about it,
It's
what it
it's
means more
ridiculous.
broadly, right? Or accountability, or what the Fed did. But we're here now. We're here now, and now there's this criminal investigation going. I'm sure you've been reading a lot over the weekend. I'm sure you've had conversations about this with people you've discussed this, with your knowledge of any laws or that have to do with the Fed. Do you think there's any way this has the kind of evidence or something that really could lead to a serious criminal investigation?
I don't think so. I would have to go over, which I haven't and won't, the entirety of his testimony that's in question. Jay Powell is not a liar. I believe Jay Powell told the truth. Exactly the words he used, I don't know. Whether they could be twisted in some way to make them sound like a lie, I don't know. But uh, the notion that he would get in front of Congress and deliberately lie, and by the way, lie about what? That there were cost overruns? There were cost overruns. He's not denying that. So
Well,
the whole thing has the ring of implausibility to it.
the thing that's interesting too, I remember watching that little bit. It was a piece of a longer, much longer testimony. And in the lot, he was asked a question. He gave a couple of answers, and I think what they're saying he lied about is that there had not been a renovation. And there are people you can read so many stories where people say that. Others say, well, in 1997 there was an Eccles building renovation. So that's just part of it. Are you surprised or not surprised that some Republican senators, some from the banking committee, are pushing hard against Trump, pushing back?
I am a little surprised because we've all been living through the history of the last year where the Senate and the House, by the way, but you asked about the Senate, has just been a parrot repeating anything Donald Trump says. They confirm, we won't go into the list of totally incompetent people they confirmed to the Senate, some of them by very close votes, one or two by a 50-50 broken by the uh, vice president, doing whatever he wants. And he's broken law after law after law. Now, I'm not talking about the Federal Reserve Act, but much more important laws, such as the things that are coming up before the Supreme Court now. Well, one of them is the Federal Reserve Act, the Lisa Cook uh, case, but there are many, many others. Um, it's a pretty bad, it's first of all a pretty bad record by the President of the United States. Secondly, a pretty bad record by the Senate and House of the United States, not pushing back on anything. So, yes, I was a bit surprised and glad to see some pushback on this.
Well, of course, Powell's statement, which seemed right from when the tape he made to put on television, right, to tell the
Yeah.
world, surprised me to the extent that the Fed seems to have been led by Powell, but a lot of people within the system seem to have been the best bet is just kind of lie low, don't pay so much attention, let him say what he's going to say. You know, the new Fed chair will be in place by May, etc. But Powell looked right in the camera and he said this should be seen in the broader context of the administration's threats and ongoing pressure. He said this is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. Has the Fed stepped up its battle back against Trump?
Yes, I think so. That was more examples of truth telling, by the way. That is what Trump is doing. He's trying to intimidate the Fed and get them to do his bidding even before he replaces the chair of the Fed, which, as I said before, is his legal right to do come May. Uh, this one crossed the line for Powell and the Fed. I mean, they're talking about criminal investigation. Criminal. What crime was committed? Um, it's the same question Lisa Cook is asking. What crime was committed?
Hmm. So it seems that this do you think this will have a lasting effect, I guess, on the Fed in the sense of
I certainly hope not.
yeah.
I certainly hope not. I mean, in the fullness of time, Trump will be gone from the presidency. There'll be another chair of the Fed, and hopefully this will be a very bad memory, worse than the Arthur Burns Nixon memory, but I think that's mostly faded. Until this Trump set of diatribes against the Fed came up, people were not talking about Nixon's domination of Burns. If you could read it in a history book, I wrote such a book, and there are many, many others that have written on that. So it wasn't forgotten in that sense, but it wasn't on anybody's mind. Uh, and hopefully this will wind up that way in the fullness of time, but we're a long way from the fullness of time right now.
So a little more broadly on this question of Fed independence, any central bank independence. Is there, in all the debates you've heard over the last year, and they've been, this is Future of the Fed, that was a big conference at the American Economics Association, which I attended this, a couple of weeks ago. Janet Yellen was on that, former Fed chair herself, Loretta Mester, former president of Cleveland Fed, et cetera. Oh, I could say Anastasio Orphanides, who worked at the Fed and was even as president of the head of the Central Bank of Cyprus. And it seems to me that people are willing to say, yeah, maybe there's things that the Fed could look at and should look at with monetary policy, et cetera. Do you see any of that? Is there any reason for the Fed to say, yeah, maybe we do have to explain things better, be a little more accountable as we move into our coming future?
I think you can always be uh, more clear in what you're doing. Maybe the Fed should say more. The Fed says quite a bit right now. I mean, in your introduction, you noted that I was vice chairman of the Fed. You didn't say that was in the dark ages, uh, but in the dark ages, we didn't say anything basically. to
Yeah.
to explain ourselves. As you may or may not remember, I fought that on the inside a lot and mostly lost to Greenspan's desire for as close to complete silence as you can get away with. That was a long time ago, though. The Fed under Bernanke and Yellen and Powell has been quite talkative, and they try to explain. Do they always get it perfectly right? No. Sometimes they confuse markets. Yes, that does happen. And when that happens, assuming it's not deliberate, and really it's not deliberate, uh, there's room for improvement. So yeah, I think there's always I think there's always room for improvement, but the Fed is doing much, much better. And most importantly, maybe I should have started my answer here, is no longer trying to be secretive and to obfuscate. That is not Jay Powell's objective when he gets in front of a microphone at the press conference. It is not their objective when they draft a statement that comes after each FOMC. Now, sometimes they're inartful, sure. Humans make mistakes or misstatements, but that is never the intent.
Alan, this is I just have to ask you, it seems so funny to me in a way that Trump is putting this extra pressure on Powell now when
Yeah,
Powell past few, these past 3 or 4 months has boom, been right on board. Oh gosh, we've got this weak labor market. Of course, it's hard to tell how weak it is because the data have been limited because
right.
of the changes. We don't, the natural rate of employment growth seems way lower. But at the same time, Powell's jumped right on the bandwagon. Ooh, we putting that ahead of the fact that inflation is still well above target, etc. Does that seem kind of make this attack on Powell and what he's doing and why for trying to force Powell to do what Trump wants? Does it make it all the more kind of ironic?
Well, yeah, I guess so. But you know that Jay Powell has Jay Powell and the FOMC majority have pushed the Fed funds rate down 75 basis points in 3 meetings. Trump wanted 200 or more basis points. So most of us think that's a little bit wacky, and that if the Fed would do that, by the way, Trump would not get what he wants because long rates would go up on inflationary expectations, not down, which is what he wants to force the Fed into doing. So he, what can I, I don't know what to say.
I know.
Trump's urgings would not really accomplish his objectives, and
Hmm.
he doesn't understand that. Furthermore, there's the point that we were on a couple of minutes ago. Jay Powell's only chairman of the Fed a few more months. So, yes,
Yeah.
he's been lowering interest rates. That's your current point. But in addition, he's not going to be in that job that very long.
Well, do you think this will have any lasting effect on, I mean, is this going to lead in some kind of permanent change to how the Fed operates? The Fed very adroitly at the last meeting announced that they had taken the steps they need to get the 12 Federal Reserve Bank regional presidents
Mm.
okayed to continue their terms for the next 5 years or however long they decide to stay there. That, in fact, some people think maybe that's what prompted Trump to go ahead and push this criminal investigation thing to kind of show the Fed that they can't get behind his back or something, because otherwise a new chair and maybe some new governors on the board could have maybe said, oh, maybe we're not going to okay the bank presidents.
Hmm.
Do you, but that's a long-winded way to say, is there going to, do you think, a kind of a shift now of any kind at the Fed when it comes to they how willing they are to cut or not cut, that kind of thing?
Um, Hard to say. I think not for the majority of the Fed. Here is the imponderable. Depending on who Trump puts in to replace Powell, assuming that person is confirmable and confirmed, is likely to be at loggerheads with the majority of the FOMC. It hasn't escaped anybody's notice that in the dot plots and lately in statements, Stephen Moran, who's the Trumpy that's on the board right now has been an outlier relative to the rest of the committee, including the people that are dovish. I mean, there are several dovish people. By the way, Lisa Cook is a pretty dovish governor that he's trying to remove. So there are a number of dovish uh, governors. It's not just Moran, but he is more dovish than anybody else. Uh, Notably, you can the dot plot that comes out 4 times a year doesn't have a label, a name of Moran, but you can see him at the bottom, the lowest interest rate. Now he's just a member and he gets outvoted, of course. Uh, Suppose that was the chairman that was trying to do that. And there is this tradition at the Fed of following the chairman unless you have a very good reason not to. I think those very good reasons not to would start coming to the fore in a big way. We have no experience, including even the Arthur Burns episode, of multiple of Fed chairs losing the FOMC vote. Losing it, never mind 3 dissents, losing the vote. We might see that.
Okay. And for people who don't follow history, Arthur Burns was someone who came in as a respected sort of economist and monetary policy making type and ended up just basically bowing to the administration. And that's why
Right.
he sort of went down in history as that kind of guy. Um, so in terms of just looking at what you're looking at, what you're thinking about the economy right now, uh, what were you were sort of, I think, the past few months, you were kind of on the fence a little bit about more rate cuts
Yep.
because inflation is
Yep.
still high and there's so much uncertainty around the labor market. Where are you now? Three rate cuts in a row. They do seem like they're sending some signals they might not cut again. Actually, the
Yep.
markets are betting now that the next meeting won't be a
Yeah.
cut, but that they'll resume again.
Yeah.
What do you think of the economy and what it needs now, and inflation in particular?
So the analogy I was using over the last couple of meetings was the nickel landed on its edge. And what I meant
Good
by
one.
that is you could make a good intellectual case either for cutting, which is what the Fed majority did in each of the last 3 meetings, or not because of the persistence of inflation. I think, and this is certainly implicit in your question, is what would I do if I was still a voting member of the FOMC?
Hmm.
Leaving aside that this issue of whether you want to oppose the chair or give deference to the chair, if it was just my own opinion, I think this is a great time to pause. And I think that's the majority of you on the FOMC, including Chair Powell. So if I'm going to make a prediction, it's going to be that they're going to pause at the next meeting. That doesn't mean there won't be more cutting down the road, because we are in this puzzle. That's what I meant by the nickel landing on its edge. We are in this puzzling situation where the labor market looks soft. And as you correctly pointed out, we don't quite know how soft because of data issues having to do with the government shutdown and also having to do with Chair Powell's statement publicly. That means he was pretty sure of it, that there's going to be downward revisions in payroll when the re-benchmarking happens. This has to do with the birth death model. How many new jobs in new firms, how many old jobs in old bankrupt firms disappeared. Those things have to be estimated, and it's very hard to get it right.
Hmm.
So the labor market is softening at best and at worst going downhill. And we need more data to see which it is. And that could get the Fed cutting again later in the year. But right now, I think just pause and wait for more data is the right thing to do.
Al, I have to ask you this because you follow the labor market closely. And again, you went out on a limb back in the days when you were working with Chair Alan Greenspan and put focus on the dual mandate, the labor market side of it.
Yeah.
But I think what the big question to me is you've got firms hiring less, but you don't have them firing. What good are more rate cuts going to do about that? To the extent that AI may be taking away some jobs and slowing down the employment of some kids who've gone to college and have studied, you know, uh, things they didn't need to study, because AI is doing it now. So why would you cut rates more, particularly when you have inflation still well over target?
Well, it's that last part that raises the big question. I don't think we have any reason to think that lowering interest rates, which stimulates more spending on investment principally, uh, and on housing, by the way, also, won't create more jobs. I think it will.
Hmm.
What you are correctly pointing out is the baseline steady state, we like to call it in economics, level of job creation per month has gone down. And there are probably several reasons for that. AI may be one of the reasons, though I think it gets more blame right now than it merits. Maybe later it'll merit more. But the anecdotal reports you hear from businesses don't really suggest that they're eliminating jobs because of AI. But there's also the end to immigration, the deportations, the fear that that's throwing. I don't know why some of these people that are illegals go to work anymore. It's scary to go to work. You may get grabbed by a guy in a face mask. Uh, so for that and a number of other reasons, just also, I mean, I'm leaving out the most obvious that we knew about, which is the demographic slowdown. Just the natural birth death process was pointing to a slowdown in labor force growth before any of this uh, happened. So you've got all of those factors and probably some others that I'm forgetting at the moment, reducing the steady state rate of payroll growth from what we thought not too long ago was maybe 100,000 per month to maybe 40, 50,000 a month. And here I'll put in that footnote that Powell raised, maybe less than that once we
Yeah.
see the revisions.
Mm-hmm.
Uh, so I, none of that suggests that lowering interest rates and getting more spending on housing and automobiles and the usual things that lower interest rates give you won't create more jobs. That's against a
Right.
lower baseline of, let's just to be spuriously accurate, 40,000 a month instead of 110,000 a month.
Mm-hmm. Well, you and I can remember the days when it was nothing to see 200 or 250,000 jobs a month, but
Yeah.
that was a very different time and a very different economy. So much going on. So, thank you for taking so much time on this. I want to ask you one kind of big picture question in terms of, okay, here we are. We've talked about this criminal investigation that Trump has posted against uh, Chair Powell of the Fed, and we've got Republican senators pushing back. What's your What's your forecast, I guess? What's going to happen? And this is we're all guessing, right? On how this is going to play out, and what would be your biggest wish? Or I guess I can guess what your wish is, but what do you want to leave us with?
I want to leave you with the hope, and I think it's the likelihood that this quote criminal investigation goes nowhere. That Jay Powell serves his term out until May. Here's the part that I don't think will come true. That Trump nominates somebody good to replace Powell. I would love to see that, but I don't think it will be the case. And then I worry about the reactions in two places, and they're very much related. Inside the FOMC, is there going to be a tongue war inside the FOMC, or will somehow this work itself out peacefully? And the market's then reaction to what happens at the FOMC. I'm quite worried about those. So if I have a wish, if I get to have, how many wishes do I get? Three? No.
Sure.
Uh, the wish would be that that comes off calmly. and we don't wind up, losing 2,000 points on the Dow and the dollar sinking like a stone and everybody going for Bitcoin and gold and all the rest. You can add to the list that in a worst case scenario would happen, and we hope we're not getting that.
All right. Well, Alan, thank you so much. Great to talk to you today. We lined up this interview last week because we were going to talk about the jobs report and all this kind of thing, and we still did. But big story, and I'm glad you could join me to discuss
Yeah.
it today. I really am. Okay.
Nice
And of
talking
course,
to you.
Alan Blinder is former vice chair of the Federal Reserve, and he's the Gordon Rentschler Professor for Economics and Public Affairs at Princeton University. He's written many books. He writes lots of articles. Frequently seeing him doing op-eds for the Wall Street Journal as well. So, Alan, thanks again for joining me. I appreciate it.
You're very welcome. Bye now.
I'm Kathleen Hays, and this is Central Bank Central.